my window.
Hello traders, Gary Wagner with the Gold Forecast here. It is April the 25th, it is Monday, and this is the Daily Report. My God, what a week we have had, and that week began yesterday in Australia. You can see right now that we are currently trading at 1510. We are looking at a daily chart. It is in candlestick format. Of course, those of you who have been with me for a while are familiar with this chart. This is our Elliott wave. This is our channel lines. Now, interestingly enough, you know that we use wave 1 as a benchmark for all of our subsequent waves. We measure the amplitude, meaning the price move that you see within this, and then we'll project that and use that as a comparison to both waves 3 and waves 5. Now, a couple of Elliott waves golden rules. Wave number 3 cannot be the shortest of any of the impulse waves. So, for that reason, some time ago, we added this particular line right here, which is simply a copy of this line. In other words, what we were saying is that on an Elliott wave count, this next rally will have to be at least the same amplitude or same price move as we saw in 1. Here's what I'm finding interesting, traders. Last night we had a tremendous rally. As you can see, these highs have just gone butt up against that, and we are forming that star. So we have reached, in terms of my first benchmark, we've actually reached that benchmark last night in trading. Now, we have obviously backed off of that, and as you can see, this particular candle that we're looking at is a doji-like candle. Of course, there is still a lot of time left in trading. Right now, in terms of the time here in Honolulu, Hawaii, it's only 9 o'clock, so we still have a couple of hours left, and we'll see if the market can move and go back to the subsequent highs that it had last night, or if we're witnessing a point in consolidation. But what I am finding interesting is the fact that we have in fact reached that benchmark. Now, when you realize that in terms of what we call our minor count, we have hit that 5 count also. 1, 2, 3, 4, and this is wave 5. So we've actually hit wave 5 within this area. That tells me that this market, A, could continue to rally, but B, could in fact begin to come down off of those highs. In other words, it would not surprise me at this point if we had kind of the following scenario. Let me change the color of that pen because that doesn't really work well. But once again, we had our 1, 2, 3, 4. This is our 5th wave. Now, you can easily get an extension. You can go to a 7 count, and as you can see, I had a 7 count here on the last 5 that we had. So you can get what's called an extension, or this could be, simply put, the end of this last leg of the wave. If in fact it is, what would we expect to happen? Well, we would then go into a very minor, I believe, minor correction of an A, a B, and a C, and then we would go to wave 5 following that particular correction. So, what is our proper move? Well, we did just get in. We've got a little bit of profits. We've got about $7 worth of profits, but my concern is always maintaining equity. I always believe that it's easier to make money than keep the money. So, due to that, we have a very, very loose stop, and I am going to recommend that we move that stop up. And traders, where I'm recommending that we move it is 1497. 1497 on a protective stop. It's hard for me even to say that because I wanted to say 1397, but this market keeps moving up. So, traders, the reason I'm recommending that is as follows. If, in fact, this market does go into a correction, then we're getting out with a $6 loss. We're in it at 1503. After the couple of really, really strong winning trades we've had, that won't upset me whatsoever. Or the market could continue higher and our stop holds. That's option number 2. And of course, option number 3 is we get some wild gyrations in the market comes down, hits our stop, and then heads north again. Now, if we get that last option, as you're well aware of, I am not afraid to buy the breakout so that if it does break back higher, we can re-enter the market. But as I said, my main strategy when I look at trading these markets is the conservation of equity that we've made. In other words, holding on to what's ours. And for that reason, I am recommending at this point that we trail our stops to 1497. I think that if this market's going to head higher, I think that 1500 as a psychological point should hold. We will just have to see. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange.